Welcome to this week's market drama. We'll begin with the S&P 500, which was down 4% for the week. NASDAQ was down, hit even more, down 5.8% for the week. So what gives? Well, it comes down to the chips stocks. NVIDIA was down close to 14% for the week. This is actually a week after they had reported earnings, but it was the 1-2 punch of essentially very high expectations and a lot of people coming back to work in September and hammering the stock. And then there was also some rumors of the Department of Justice doing a subpoena on NVIDIA when it comes to antitrust potential case. Nothing has been materialized from it, but that was enough to send the stock down 14%. And as a result, the overall S&P 500 and NASDAQ were hit pretty badly. Something I covered last week is NVIDIA accounts for 6% of the S&P and is a very volatile stock, right? So it creates a higher volatile overall market. Outside of NVIDIA, Broadcom plunged almost 11% after they reported earnings that showed earnings were essentially below analyst expectations. So it kind of brought down all the other chip stocks as well and sympathy. So that's on the stock market side. We also had a new jobs number that came in below expectations at 142,000. The expectation was 165,000 new jobs. They also brought down the last 2 months figures, revised lower, bringing the 3-month average to 116,000, well below the average we had seen the last 3 years of 334,000, right? So job market is getting weaker, and that data point, once again, gave us that inclination to think that that's the case. On the more positive side, something to keep in mind is that the unemployment rate remains well below long-term averages of 5.7. So yes, it is going up, right? It went as low as below 4%. It went at 3.7%. It is now 4.2, right? So unemployment rate is going up higher, but it's coming from very low levels, well below historical averages. Which gives some room, right, for the Fed to start easing, helping the overall broader economic situation before the unemployment rate and the overall employment picture goes from soft to full-blown recession. So obviously, we'll keep an eye on that. Next week, we have CPI inflation number as well as consumer sentiment data. CPI inflation obviously is a very important metric. It probably will continue to show that inflation is cooling off, which would give another indication for the Federal Reserve that it's time now to start lowering interest rates to help the other part of the equation of their dual mandate, right? They have a mandate on inflation and then the other one on jobs. Lowering rates is now a priority for them to help this cooling job market stabilize. That is it for this week. Stay tuned for next week.